Okay, so what's changed? What's changed in 2015? Well, first of all, there's a new type of broker. I don't know how many of you have heard of it, but there's something called a binary options broker. And what essentially they allow you to do is they say it's trading, but ultimately you're just placing a bet on whether the market will be up or down after 1 minute, 2 minutes, 5 minutes, whatever it is. All right. So you can place a bet and say after X amount of time, this market will be, it will be higher or it'll be lower. So what does that mean? Just now I was talking about the fact that volatility contracted, the brokers widen their spreads, all of this kind of good stuff, which means you need the market to move a significant way for you to be able to make your money. With binary options, actually, you don't need the market to move that far at all. You just need it to move in a particular direction, which most news announcements do. So with the binary options broker, as long as you can, I don't want to say guess, or let's say as long as you can trade the right direction, you can pick the right direction, then you can make money. So as long as you say the market's going to be up after 1 minute, 2 minutes, 5 minutes, and it is up, even if it's 0.00001 of a pip up, then you will still make money. So the market doesn't have to move 10, 20, 30, 50 points. It just has to move. Now, the only problem with binary options brokers is the fact that it's a negative risk reward. All right. And especially trading around the news. So let's say, for example, you put down £100 on any one particular bet or trade. You would likely only return somewhere around £160. So that's £100 plus your 60 back. Now, what that means is you're in a negative risk reward situation. So you need 2 good trades to outweigh 1 bad trade. All right. But with this way of trading, it becomes so predictable that you have such a high strike rate that actually it is really quite profitable. So taking into account the introduction of binary options brokers, you no longer need a big move to make your money. Plus, with the recovery, all right, the world is no longer as focused on the safe haven trade, and the markets have become more predictable. So a good number for a particular country usually signifies a move, a strength in their currency. So it becomes a little bit more predictable as well. So how to trade the news now? Well, in today's world, we trade the same approach as we did 10 years ago. But now we use the binary options broker instead of a regular broker. Straddling is still not a viable option because the brokers still widen their spread, so it's not the best way to trade. But the key is to find the news announcements that have the potential to move in one direction with very little whipsaw. All right. Now we don't mind whipsaw as long as it's within a time frame, because with binary options, there is no stop loss. You make a bet, and after a certain period of time, you're either right or wrong. So we don't mind a little bit of whipsaw, but what we don't want is we don't want news announcements that just go sideways. We want news announcements that have the potential to move in one direction only. So things, we're talking about the major announcements. So things like non-farm payrolls, interest rates, GDP, retail sales, PPI, CPI, things like that. They're the sorts of announcements that you want to be trading. All right. Once you've found the high impact announcements, then you want to look at identifying the right instruments for each announcement. So for example, if you're trading a US release, then you may opt to go for something like the dollar yen. If you're trading a euro release, then you'll be trading the euro dollar. If you're trading a pound release, a UK release, then you'll be trading sterling. Does that make sense to everybody? So with every announcement, you can't just trade the one currency pair across the board. You have to trade the one that makes the most sense. Does it have to be a news trade, or can you say the S&P? You can, with binary options, you can also say that some of the indices are higher or lower in 2 minutes. So you can use it for that as well. But in this webinar here, obviously, we're just talking about trading the news. So find a key news announcement and find the right instrument to trade that announcement. That's the first thing. Now we are trading the reaction, all right? We are only trading the reaction. We're not trying to predict the way the currency is going to go. We're going to trade the reaction. So once the release has come out, once the numbers have hit the board, then we will take our trade. So once we've found the announcement and the currency pair that we're going to trade, what you need to do is you need to go back over the last 6 to 12 news releases. Now, I know this sounds like a lot of work, and to be honest, it is a lot of work in the beginning. But once you have all of these statistics, all right, once you have all the statistics, and I'm going to show you here, then it's actually quite easy because each month, each announcement that you trade, you update the numbers there and then, all right, and then it becomes much easier to trade. So you need to go back over the last 6 to 12 news releases, and you need to identify the open, the high, the low, and the close price for the 1 minute candle, for 2 minutes, 3 minutes, 5 minutes, 10 minutes, 15 minutes, and 30 minutes after the release. And at a minimum, you want the 1 minute, 5 minute, 15, and 30 minutes after the release. Now, why do we need all of those time frames? Ultimately, because every news release is different. So there will be some news releases where you get initially high impact and the market will move in your direction. So after a minute, you'll be in the money, you can take your profit. And there are other news releases where sometimes it can take a bit of time for it to pick the ultimate direction and then go in your favor. So what you need to do is you need to identify what is the most predictable time period for that particular news announcement and for that particular currency pair that you are trading.